Hi, I'm David Conger for Cognisea LLC. Today I'd like to introduce you to a powerful new monetary system that you can create with our software tools. It's called credit clearing. When we talk about credit clearing, we're not talking about something like credit cards. Credit clearing is basically doing business with certified IOUs instead of money. Here's a simple example of how it works. Suppose you have a friend, Al, who owns the local diner down the street. He lets you put meals on your tab. Al has extended credit to you. Suppose also that you have some chickens. You sell eggs to Bob on credit. Now imagine that you and Bob and Al are all high school buddies. Because Al knows Bob, Al knows that Bob will pay his bills. So he accepts Bob's IOU as a way of paying off your IOU. No money changes hands in this transaction, only credit. Credit clearing cooperatives work like this example. You just scale it up to hundreds or thousands of people and organize them into an economic cooperative. Everyone who buys and sells does so by extending credit to everyone else in the system. The result is that everything is done with IOUs rather than money. So what are credit clearing cooperatives? You decide whether you want to be a for-profit company or a non-profit. When you become a member, you buy stock in the co-op. You have a vote in all of the co-op's policies and everything it does. If your co-op is a for-profit company, it can invest, own businesses, provide services, or whatever else you want it to do. For example, suppose your co-op decided to get together with a bunch of affiliated co-ops and start a private school. All the co-ops invest in it and charge tuition for non-members. Imagine that the co-op gives members significant discounts on tuition. It becomes cheap enough so that you can send your kids to the private school. As an owner of the school system, you have a strong voice in what is taught and how it is taught. In fact, your voice is much stronger than you have in the public school system. Because the co-op becomes your own local microeconomy, being an owner gives you more freedom and power to choose. The co-op does not operate on volunteer labor. Similar co-op systems have been tried using volunteer labor. They do well at first, but quickly decline or die out. The co-op employs a staff to make it run. Co-ops generally have at least 200 and not more than 5,000 members. You don't want too many members in it. That dilutes your vote. Your co-op affiliates with many other co-ops that provide goods and services that yours doesn't. By joining a network of affiliated co-ops, you can become part of a large, robust, and vibrant economy. In credit clearing cooperatives, you conduct business in the usual way, but you use co-op credits instead of money. Co-op credits are IOUs. Your IOU is completely digital. You pay and receive payment electronically. You use your co-op credits like they were money. In fact, the whole experience is designed to simulate what you're used to with money and banking. But there is no money and there is no bank. The technology that drives this is extremely easy to use. It's no more hassle than paying with a debit card. When you buy things with credits, it seems like you're issuing your own currency, but you're not. There is no money there, and if you want to think of it as a currency, you can call it the unmoney. Now let's look a bit more at how co-ops work. We'll start by talking about what it's like to join a co-op. Trust is the essence of business. So you want to form your co-op with the people you have a reasonable amount of trust in and who live in your local area. When you join a co-op, you pay your entry fee. The fee doesn't just make you a member, you are actually buying stock in the company. You undergo a background check as part of joining the co-op. If someone has personal problems and goes bankrupt, the co-op can provide itself with various types of insurance to handle that. It can also provide remediation plans for recovering from life's difficulties. But everyone in the co-op system must be reliable under normal circumstances. So you need to screen your members carefully. In fact, you need to screen them as well as banks and credit unions do when they give out loans. Once you join the co-op gives you Q-Garands, which is a digital version of gold bullion. You can't spend Q-Garands. Instead, you use them to back the credits that you issue. The number of Q-Garands you have determines the number of credits you can issue. When you run out of Q-Garands, you run out of credit. But when you provide goods and services to other co-op members and accept their credits as payment, the system automatically redeems your Q-Garands so that you can issue more credits against them. You buy goods and services using your credits that you issue against your Q-Garands, or credits that you get by providing goods and services to other people. When you sell goods or services and accept credits as payment from others, you can accumulate credits beyond what you need to redeem your Q-Garands. You can use the excess to increase your credit issuing limit by buying more Q-Garands. If you accumulate still more credits from other people, then you can save, invest, and spend the additional credits. Because of this redemption system, all of the credits in the system end up being backed by goods and services rather than commodities like gold or silver. The system never suffers from inflation or deflation because the number of credits in circulation matches the amount of goods and services in the economy. Now let's examine the process of actually issuing credits. You issue credits against your Q-Garands. Q-Garands are priced against an international reference currency called the qubit, which we at Cognizay are in the process of creating. The qubit provides a standard worldwide measure of value that never inflates or deflates. When the qubit is released, 1 Q-Garand will be equal to 10 qubits, and the qubits will be initially priced at $10 per qubit. This makes a Q-Garand worth $100. So if you have 20 Q-Garands, your credit limit is 200 qubits or $2,000. Your co-op needs a server running our software. It handles all of your credit transactions. So before you start spending, you log on and issue yourself some credits. You deposit them into your savings account on the server, or you can put them directly into a digital wallet on your computer or phone. You need a digital device of some kind or other to run your wallet software on. For most people, that will be a phone, a PC, or a tablet, like an iPad. So you withdraw some credits from your savings account and put them into your digital wallet. You use your digital wallet software to store your credits, to pay, and to accept payments just like you would with cash. You use digital safe software to back up all of your wallets on all of your different devices, or put credits into your co-op savings account. So what's it like to shop with credits? When you shop, you must have a portable device with a camera and the digital wallet software. This device, for most people, will be their phone. So you put some credits on your phone, as I've already mentioned. At the store, you start the wallet software and point the camera at the price tag of an item that you want to buy. The price tag has a 2D barcode on it containing the item's price. The wallet software shows you the price in credits. You pay at the cash register using your wallet software. How do you sell goods and services with credits? You sell goods and services to people in your co-op or in your co-op network and accept credits in payment. They pay you with their digital wallet. There is also an app that acts as a cash register. It's a little more flexible and pleasant for customers, so if you're selling things on a regular basis, you probably want to download it. It's free. When a buyer pays you, your digital wallet software, or cash register software if you're using it, contacts your co-op's transaction validation service, or TVS for short. So you must have an internet connection to do business. But that's not an issue for most people these days. The TVS validates their credits. The TVS then issues digital receipts to both you and the buyer. Your receipt contains the credits the buyer just paid you. The buyer's receipt contains the change, if any is due, or just a summary of the transaction. Your receipt is like cash. If you lose your device, your credits are gone. Now that's not strictly true because you can back up your digital wallets to a digital safe. If your device gets lost or stolen, you can quickly get to your digital safe and invalidate the credits on the device. That way they can no longer be spent. Your backup copy of your receipt becomes the only valid receipt that can be used. So your credits are safe if you can get to your digital safe software in time. It's also possible to set your wallet software to deposit the credits you receive directly into your account when you are paid. If you use the cash register software, that's the default setting. To understand the system better, let's take a closer look at the payment process. First, the cashier rings up your purchase. In this example, your total is 2 credits. The cash register generates an invoice with the total. The cash register posts the invoice somewhere on the internet. The cash register generates a 2D barcode containing the URL and displays it on a screen facing the buyer. You, as the buyer, then point your camera phone at the barcode. When your wallet software sees the barcode, it automatically goes to the URL and gets the invoice. Your wallet software displays Bob's Corner Groceries, 2 credits. You choose Accept Purchase, and the wallet pays Bob's Corner Groceries. Because the cashier is paid, there's no need to identify yourself to the cashier any more than there would be in a transaction with physical cash. Now, please be aware that this scenario is the lowest common denominator. In other words, this is the process that is used if you don't have a smartphone. If you do, your smartphone can use Bluetooth, Wi-Fi, or near-field communication. Then it's even easier. The cash register just transmits the invoice directly to your wallet and displays it on your screen. You click Accept Purchase and you're done. When you accumulate credits, it's not like keeping them in the bank. You don't get any interest for that. If you want that, you have to invest or lend them. It's important to invest credits to keep them circulating. This also gives your co-op and all of its members another way to make money. Good investments can make your entire co-op very profitable. Your co-op can form investment groups. You can join one of those groups and then put your credits into its investment account along with the credits of many other members. You get a return on your investment, but it's all in credits. Members of the co-op can apply for loans from the investment accounts. They can use those loans to start businesses, expand businesses, buy houses, and much, much more. I've already touched on the idea of co-op networks just a bit, but let's take a closer look at that idea. No one co-op can provide a complete range of products and services for its members, so each co-op can join a larger network of affiliated co-ops. So your co-op should join a network of co-ops. You can buy and sell with members of other co-ops just as if you were all part of the same co-op. The larger your co-op's affiliation network is, the more goods and services you can buy, so it's better for you. However, your co-ops should check out other groups before joining. You decide who you trust enough to do business with. All the co-ops in the affiliation network follow the same standards of business. The affiliation networks audit their member co-ops. No government is needed. The entire credit clearing co-op industry should be pretty much self-regulating. The more government interferes, the less likely it is that this will succeed. All of this sounds well and good, but when it comes down to it, most people want to know, why should I care about credit clearing co-ops at all? Well, first, you can buy and sell with credit rather than cash. You're an owner, so you can vote. You have a greater say in your own local microeconomy. Credit clearing co-ops create chances to invest. Good investments can enrich both your co-op and you. As the co-op's wealth grows, it can provide more services. And this last point is an important one. I mentioned that your co-op, along with other co-ops, can create its own private school and handle the education of your children in ways that you decide. The same is true of your health care or your retirement or most of the other services that you need. The truth is, you don't need government to provide for you and give you handouts. Through the co-op system, you can handle most of your needs for yourself, and you can do it better. Credit clearing co-ops also insulate you from the impact of big drops in the dollar. Drops in the value of the dollar will impact you some, but not as much as people who don't join co-ops. Even if the US dollar becomes entirely worthless, it's possible for you to still do business, have savings, and buy what you need through the co-op system. Under normal conditions, you'll find that your co-op's credits act as a counter-cyclical currency. That is, when the dollar does badly, people and businesses will move into credits more. When the dollar does well, people and businesses will use that more. The result of the counter-cyclical nature of credits is that the economic ups and downs that we always see are buffered and mitigated. When unemployment rises, it's less severe. When banks have credit crunches, you simply move into co-op credits and keep doing business. Before we end, there's one thing that we need to be sure and say. Pay your taxes. The IRS requires that you report all your credit co-op income as barter income. Simply file an annual report using Form 1099-B. With credit clearing cooperatives and networks of cooperatives, you can transcend money and move toward economic democracy by having a greater voice in the economy in which you participate. Thank you.